I'm happy that the market is broadening out. This was the case in late 16 as well. Value took off and left growth behind. And whenever I see that happen, I say, okay, this bull market has broadened out. This is good news. What we do during these periods is concentrate our portfolios towards our highest conviction names. And so that's what we're doing. We had extended the number of names in the portfolio from the low to mid 30s at the bottom of the coronavirus. And now we're at roughly 55 for our flagship fund. And we are starting to sell the more liquid names and buy some of the more pure play names. So the more liquid names are either more mature, the Facebooks, the Apples, and so forth, or they are participating in innovation, but they're not pure plays. So Regeneron, Novartis, and so forth. So more liquid, in order to have cash-like instruments to use at a time like now, and move, again, concentrate towards our highest conviction names. Yes, we can buy a stock up to 10% of our portfolios. And that's certainly in the ETFs. We report our holdings at the end of every day, so anyone can see that. And yes, we have been building whenever we can. Now, we built up to 10% last week, so the stock behaved in line with our portfolio. So again, we can't buy anymore here. If it were to deteriorate at a rate beyond that of our other portfolios, so drop below that 10%, we would then have the latitude to buy more, of course. We're getting compliance is helping us cross our T's, dot our I's, and do everything we should do before we send it out. But the two things that have happened to Tesla since our last projections are, one, it has increased its market share. When we put out our original $4,000 price target, so the equivalent of $800 now, we thought that Tesla's share would drop from 17%, this is share of the electric vehicle market, global electric vehicle market, from 17% then to 11%. Instead, its share increased as others with wonderful brand names started increasing the number of electric vehicles in their companies. So that was a big wake up. In the United States, I think Tesla, through the third quarter at least, was still 80% of all electric vehicles sold in the United States. So pretty stunning. The second thing that has happened is autonomous. The probability that Tesla gets autonomous right, we believe, has increased from the 30% that we had in our base case in our last model. What's interesting about autonomous is the margins in autonomous, the gross margins, are in the 80% range. The margins for electric vehicles alone are in the 25 to 30% range. This is a 5-year projection. So the model changes completely if Tesla gets autonomous right. Well, truth wins out. We know that our focus on disruptive innovation is going to be very productive. We're focused on 5 platforms involving 14 technologies, all of which are moving into exponential growth trajectories. And beyond that, many of these technologies are converging. So autonomous taxi networks are comprised of 3 technologies or 3 platforms: robotics, autonomous vehicles or robots. Electric, they will be electric. Electric is going to be the cheapest way to go. And artificial intelligence, they will be powered by artificial intelligence. Now, those are 3 S-curves coming together, and we think they're going to cause explosive and highly profitable growth. And I don't think most research departments are set up to focus on innovation this way. They're very siloed, specialized. We're focused on platforms. They're focused on sectors. And we're focused on the 14 different technologies associated with those platforms. These S-curves are going to collide and create so much positive energy. Actually, the way we do our research is We will speak with IR. We don't want any special treatment, but we have a 5-year time horizon. And so we're really asking more technology questions than anything about the short term. So you can see from the podcast, I think March of 19, as the stock was cascading downward, we had a fantastic, Tasha Keeney and I had a fantastic podcast with Elon. And that podcast is evergreen because, again, we're talking about long-term time horizons. So you'll see how brilliant he is and how focused he is on Tesla. And we did talk about the crypto decision, the decision to shift some cash into crypto. Certainly, we were fully supportive of that. Any company on the right side of change should do diversify in that way. We, of course, and I know they believe they should keep enough cash on their balance sheet to support their operations. And I think with the focus on their cash, sitting down every day with our analysts and being really excited about the way the world's going to work and really just wanting to share that with people, from an educational point of view, just help people understand how radically the world's going to change and how it is so important to get on the right side of change. And I'm not just talking about portfolios here. I'm talking about parents and grandparents guiding their children and grandchildren to the right side of change. That's how radically we think the world is going to transform. So when we go through a rotation in the market like this, as I mentioned before, I think the bull market's broadening out. That's great, but be careful. This rotation into value, make sure you understand whether these companies are primed to move into this new world or if they're going to be disrupted. And, we do think energy and financial services, which are the two best performing groups this year. So I think it's 37% and 15%, something like that. We think they are going to be some of the most disrupted sectors of all, given electric vehicles, autonomous electric vehicles, and digital wallets. So I work just really charged up, saying, "Hey, it's a beautiful day. Let's share the news. Let's share the good news." I did a YouTube video. We're starting to do them regularly now that the markets are unsettled. And in the last one, I depicted the difference between institutional and retail investors today. We are much more embraced by the retail investor. The retail investor has seen the future.